these are the items of the trial balance which we have to use in opening our trial balance. So what do we have to do? Here, so that's the first step, done. Now we place each item to the debit side or the credit side of our trial balance. The first item we have is buildings. Building is an asset, so it's going to be on the debit side of our trial balance. The amount is 122,000. Then we have cash in hand. Cash in hand is a non-current asset, so it's going to be on the debit side of the trial balance for 2,469. Then we have carriage in. Carriage in is part of our cost of sales, so it's going to be the debit side of the trial balance because of the expenses though. So we have it at 500. Carriage outward is part of our overheads, so it's going to be it's an expenses also, so it's going to be on the debit side of our trial balance. Carriage out 400. Then we have capital. Capital is the amount of money the owner of the business has given to the business. That means the business is owing the owner of the business. It's going to be a credit entry in the trial balance. Capital 25,000. Then we have drawings. Drawings represent the amount of money withdrawn by the owners of the business for personal use. So that's going to be on the debit side of our trial balance for 9,000. Discount received. Discount received means the business has purchased maybe in bulk and it has gotten certain reduction in its sales or in its invoice because it buys in bulk from the supplier. So that becomes an income for the business. It's going to be on the credit side of our trial balance. Discount received 200. It's going to be on the credit side. Equipment. Equipment is a non-current asset which makes it to be on the debit side of our trial balance. Equipment 30,000. Fixtures, it's also non-current assets to be on the debit side of our trial balance. Fixtures 3,000. Eating and lighting, that's also an expenses to be on the debit side of our trial balance. Eating and lighting, amount 1,000. Computer supplies, it's part of our non-current, it's an expense for the business, and it's a non-current, it's a current asset, so it's a non-current asset, sorry. It's going to be on the debit side of our trial balance, 300. It's an expense in the supplies, okay? General expenses and expenses going to be on the debit side of the trial balance. General expenses 500. Wages, which is payments to the workers, it's also an expenses to the business. It's going to be on the debit side. Wages 21,789. 21,789. Then opening inventory. Opening inventory is the closing inventory for the last year for inventory now will be on the debit side. But when it comes to closing inventory of the trial balance will be on the credit side of our trial balance. But opening inventory, because it's the closing inventory of the last year, it will be on the debit side of our trial balance. So opening inventory, which is for 2016, yeah, so it will be 3, 4, 5, 6. 3, 4, 5, 6. Then we have loan. Loan is a long-term liability, non-current liability. It's going to be on the credit side of our trial balance. Loan, amount 80,300. 80,300. Then we have purchases. Purchases it's an expenses for the business, and it's going to be on the debit side of the trial balance, 45,000. 45,000. Then we have sales. Sales is going to be on the credit side of our trial balance. Sales, amount 128,870. 128,870. We have revenue returns, which is the debit side. Because revenue is on the credit side, the revenue returns will be on the debit side. It comes back to the business. So that is amount 870. 870. Sales is the same as revenue. So if revenue is on the credit side, the revenue returns will be on the debit side. Then we have purchases. Purchases returns. Purchases is on the debit side of our trial balance. Then purchases returns will be on the credit side of our trial balance. So it's going out of the business. Purchases returns 550. 550. Then we have trade payables. Trade payables are current liabilities. So it's going to be on the credit side of our trial balance. Trade payables, 27,684. 27,684. Then we have trade receivables, which is a current liability, or current asset, sorry. It's going to be on the debit side of our trial balance, 20,000. Now, we check if our trial balances. Rent paid for the total. We have rent paid for 2,300. 300. Oh, we have a lot of things missing here. We have computer supplies 300. Computer supplies 300. Our general expenses here is 20. Sorry, we're making some mistakes here. Our general expenses is 20. It's 20. Then we have rent paid. We have rent paid 2,300, which is an expenses. What else is it that we didn't have? We have motor expenses. Motor expenses. General expenses 20. Our motor expenses is not here. We have motor expenses, which is 500. Motor expenses 500. It's not there. Motor expenses. Let's check. Motor expenses, which is 500. Then I think we should get it right now. So let's add it again together. We have 21789, 3456, 45,000, 870, 20,000, 2,300, 500, 262,604. So we check now. On the debit side, we have 25,000 plus 200 plus 80,300 plus 128,870 plus 550 plus 27,684. Yeah, 262,604. So the debit side of our trial balance is 262,604. 262,604. So the debit side of our trial balance is 262,604. The credit side of our trial balance is also 262,604. So our trial balance is balanced.